the long-term trend metrics of gold and silver are in no manner near or even close to jeopardy. The sharp drop we just saw doesn't even put them in jeopardy when you look at long-term momentum of those markets. It's just a downtick. Look where it was then. You're trading right around there now. Go to the left, go to the big collapse day there. Look at that close. It was about 4,700. Requires not only getting back above that average, but getting above the close that peaked above it several weeks ago. When you clear that, this momentum pattern goes into a full positive zigzag. I cleansed the low of February to no avail. I built structure, and now I'm headed back up. We think getting back over 80 again in silver is a table pounder. And you come out of this congestion to the upside, and I think what's on the other side of this congestion zone will take silver to $300 to $500.
Given where we are now, sounds like you still feel comfortable saying, oh, we're getting there.
That's a month after the collapse in gold and silver. They weren't making new highs, but the miners were.
Yeah.
And then when we came down in March, the same sell-off as you had in the gold miners on the weekly price chart there is the March sell-off. It's never the case that all assets go down, okay? If you run out of stocks because you're scared and you're getting hurt, and the bonds aren't acting well, what do?
Well, I think you go down here, right?
Yeah, you go there and you buy the gold pullback. Now, this doesn't show the long-term trend. It just shows the daily action since late last year. And what we're looking for on gold and silver right now, and the miners, are metrics that are shorter term than what we just looked at on the stock market and bonds. Why? Because frankly, the long-term trend metrics of gold and silver are in no manner near or even close to jeopardy. Which the sharp drop we just saw doesn't even put them in jeopardy when you look at long-term momentum of those markets. It's just a downtick. Okay.
Okay. So just, sorry, stepping in, but a lot of people here are invested in the precious metals.
Yeah.
A lot of them were in before the big price run. Some other ones jumped in, at much higher prices. They've all been kind of biting their nails for the most part since mid-January because all right, yeah, they've gone through pretty material corrections, silver especially. I hear you saying, I'm not worried at all.
No, I'm not. What we're looking for, first off, if you look at a monthly chart of gold, you don't see it here. The collapse occurred really one day. The last day of January was the huge collapse you see on that daily bar chart.
Silver just suffered one of its sharpest corrections in months. But according to momentum analyst Michael Oliver, the real bull market may still be ahead. While retail investors panic over volatility, Oliver says the long-term structure for gold and silver never actually broke. In fact, he believes this violent consolidation is setting the stage for an explosive breakout that could eventually send silver toward $300, even $500 an ounce. So is this just another fake rally, or the final shakeout before the biggest precious metals move in decades?
Look where it was then, okay? You're trading right around there now. Go to the left, go to the big collapse day there. Look at that close. It was about 4,700. The next day in early February got down to 4,400.
Okay, yep.
That was your first low. It was basically a 2-day sell-off. Okay. There's been 65 trading days counting from that January 31st collapse day. We've had 65 days of up, down, up. And you can draw a line sideways, basically, from that January collapse, and you've been on either side of it.
Yep.
Same is true with silver, okay? So who's winning? Well, it depends on what week you look at, okay? Unless you shorted at 5,400, 5,600, 5,500 gold, and you shorted instead at 4,800, well, you've been kissing your sister for 2 to 3 months now. It's been on above and below, above and below. So we regard this as a violent congestion zone, and we like what happened in March. Now, what happened in March, that late March sell-off, was a cleansing break, we think. And before it happened, a week prior to it happening, we suggested that it would likely happen, that we would go down in gold and silver and nip out that February price low. That February low was 44.20 something on gold. And when you collapsed in March, again with war news, okay, as a motivation primarily, it took it out for all of about a day and exploded well back above it, 4,200 level. So in other words, it ran the stops, so to speak.
Yep.
So anybody who said, well, I don't want it to go through the Feb low, it's all over then. Well, okay, you put your stop there, you're stopped out. What's happened since? You've lived mostly above it. Same with silver. It had a low in the 66 level. It got down to 61, I think, in March. Where are we trading now? 74. You know, it's violent congestion, mostly lateral. I think that what we're looking for here, here's Silver Daily showing the same thing. Look where we are as of
Yep.
Friday. We're down a bit today, yes, but you're back above. That's Gold Daily. And Silver
Oh, sorry.
Daily. Silver is Friday. You can see the close. There was an up day. We're
Yep.
down today, a couple bucks, but we're still back above that February low. And if you draw a line through most of those low closes that occurred in February, down in the 70s, well, you're just sitting there.
Hmm.
Been above it, been below it. When we look at our momentum charts, and this is just one example, you can see that on the 50-day momentum, you had a downtrend, fairly steep. Well, you broke out of that right after you made that March cleansing low in price, where you swept the Feb low in price. Momentum made a low and broke out above that multi-point trend line and rallied up to back above the 50-day, above the zero line, and has
Yep.
since gently pulled back. You close above that red line and close above the high close on that oscillator that occurred a few weeks ago. And we regard this as a fully shifted intermediate trend situation. Gold has a similar situation. You
Okay.
look at
So with
this,
silver, that's what, 80,
yeah,
80.
let me put it this way.
Yeah.
Instead of getting specific, because the numbers change every day. Why?
Yeah.
Because we're looking at a 50-day average and it's declining right now. Okay. It requires not only getting back above that average, but getting above the close that peaked above it several weeks ago. When you
Hmm.
clear that, this momentum pattern goes into a full positive zigzag, meaning, okay, I'm back. Okay. I cleansed the low of February to no avail. I built structure and now I'm headed back up. We think getting back over 80 again in silver is a table pounder. It's
Okay,
just
got it.
a,
So, so silver, it's about 10%. Gold, are we talking not
gold get
even?
up, you get above 4,800 again, and I'd say, wipe your brow if you've been panicked and assume. Now the numbers will change, and we deal with that in our reports. So I
Yep.
can't give you the numbers because they literally change week by week, day by day.
Yep.
And we're looking
Totally
at
get that
different
part.
metrics other than this. But basically, you don't have to get back up to, 100 on silver to convince us
Got
that
it.
that the
Yep.
congestion. You get back above 80, you get gold back over 4,800. And you see those two things. And broadly speaking, we have enough momentum metrics to click back to positive, intermediate type metrics, not long
Okay.
term. Long term has never been broken. That say, okay, game back on again. And we think what is on the other side of this violent congestion zone is an even more dramatic upside than what we saw in silver from late last year. Like, you go back to last summer, it was 45 bucks. Okay. You tripled. And right now you're trading almost at double that, not quite. It's only been a year and a bit, not even, excuse me, not even a full year. And you come out of this congestion to the upside, and I think what's on the other side of this congestion zone will take silver to $300 to $500 and do
Okay. So
so.
just for scale, folks, looking at the price chart here,
Yeah,
here we're at about 80, 2 to 300 bucks would be
yeah,
up about
yeah,
here.
yeah. 3 to 500 is where I
Sorry,
think.
3 to 500. I gotta go even
Yeah,
higher.
yeah.
Okay. So we're up here.
There are
Yeah.
long-term reasons for that assumption. There are also fundamental reasons. There are monetary reasons. We've got like umpteen reasons and archival examples of markets doing the same. And basically, in broad strokes, silver was vastly underpriced for too long. And when something gets overpriced or underpriced, when it corrects the other way, it usually overdoes it. Okay.
Yeah. So Michael, you and I, this was back, can't remember the exact date, but we recorded, I think, on the day before silver had its big puke moment. And this is before the war.
Yeah.
And you had made a very bold statement of saying, hey, wouldn't surprise you for silver to get to 250,
Hmm.
maybe even 300 bucks by this summer.
Hmm.
Now, you didn't know that we were about to go to war. And obviously you're calling as best you see with the data you have at the moment. Given where we are now, sounds like you still feel comfortable saying, "Oh, we're getting there. We're getting to 300, maybe even up to $500 an ounce silver." Um, oh, are you changing your timing estimate at all,
No,
given some of the things that have happened?
I still think it could be by late summer, by this summer sometime. In other words,
Okay.
I think once you come out of this congestion zone, yeah, and basically forget the 120 high, that was phantom. You were barely up there for any time at all.
Right.
Basically,
Yep.
call it, let's say, above 100 much, okay? Most people are then going to wake up and say, golly, it didn't break down. It wasn't a top like everybody said.
Hmm.
I guess I better get back in, or,
Hmm.
I'm glad I didn't get out. Uh, I think what's on the other side of that could be done in like 3 monthly bars, another quarter of upside, where you
Okay.
gush to those levels.
All right. Well, as a substantial silver holder, I'm going to say from your lips to God's ears, I hope this indeed happens on that type of timeline.
But if you do a spread relationship, a relative performance relationship of GDX versus gold, and go back a couple of years, and then plot SIL versus gold, silver miners versus gold, but take
Yeah.
XAU or GDX. They have gold, silver miners in both, okay? GDX actually has about 20% silver miners within it, even though it's a gold miner ETF. You go back through the years and you look at what's happened in the last several years, they beat the pants off of gold on a percentage gain basis.
Hmm.
So yeah, there are days here and there where they look like heck. Now look at that chart at the top. This is the price chart of GDX weekly. You see the January high is the lower first high. They collapsed into late January. They went up and made a new high in February, whereas gold wasn't anywhere near its high. So you see that weekly high up there?
Yep. Right
Yeah,
here.
that is February. That's a month after the collapse in gold and silver. They weren't making new highs, but the miners were. And
Yeah.
then when we came down in March, the same sell-off as you had in
Oh,
the gold
sorry.
miners on the weekly price chart there is the March
Yep.
sell-off. They took out their February low as well by more than gold and silver did. But again, they exaggerate both ways.
Right.
Okay, now you look at the price chart and it's kind of confusing. Is that a top or is that just violent congestion?
The recent collapse in gold and silver scared a lot of investors, but according to Michael Oliver, the long-term trend remains completely intact. He says the January crash was nothing more than a short-term shock, not a structural breakdown. After the sell-off, both metals entered what he calls a violent congestion zone, spending nearly 65 trading days moving sideways. But Oliver argues that this isn't weakness, it's compression before expansion. Silver briefly broke below key February lows during the March panic, triggering stop losses and shaking out weak hands. But prices quickly snapped back above support levels. To Oliver, that's classic market behavior before a major breakout. Now all eyes are on the key trigger levels. Oliver says if silver reclaims $80 and gold moves back above $4,800, momentum flips fully bullish again. He describes that move as a table pounder signal confirming the next leg higher. And his upside target is massive. Oliver believes silver could surge to between $300 and $500 an ounce once this consolidation resolves upward. His reasoning? Silver remains historically undervalued relative to gold. Right now, silver trades at only about 1.6% of gold's price, compared to over 6% during previous historic peaks. He also points to miners as a major clue. Even during recent corrections, mining stocks, especially silver miners, continued outperforming gold itself. That divergence suggests institutional money may already be positioning for the next phase of the rally. According to Oliver, the biggest mistake investors make is exiting during periods like this. He believes the current chop is exhausting retail traders while smart money quietly accumulates underneath the surface. And if momentum finally breaks upward, he warns the move could happen incredibly fast, potentially in just a few monthly candles. For investors watching the precious metals market, this may not be the end of the bull cycle, but the setup phase before the real explosion begins.
I look at the momentum chart below. This is weekly, and it has now set a structure. Now, what's important for MSA is things we've learned over the decades. When momentum has waves that are clear, usually three is all you get. If you look
Okay.
at that high on momentum, it occurred in January, not when the February price high occurred. That high reading on there, that's the February high. Price was making
Right.
a new high then, but it wasn't making a new momentum high. It was a hint. Okay.
Yep.
But you've had one wave down, a rally, a second wave down to the deep levels, back up, and now you're in your third wave of decline. When this one turns up, it's over. So if you turn up from that third wave, and you take out that red line, we think it's over. Congestion zone is resolving to the upside.
Okay.
And that'll change week by week. In this case, it's 10-week average. We have other metrics. So there's no sense specifying a number because it's going to change. But we see momentum age here, not freshness to the downside. We see age.
Okay. So you see the weakness is kind of being played out pretty much at
It
this
played
point.
out pretty much. And I think that when you cross that red line on momentum, regardless of where price is at that point, and it doesn't require taking out that price high, the recent high, for example, we think the miners are saying what we're seeing in silver and gold. We're out of here. Okay.
That's your green light that it's game on. Although I
That's the
would think
green
you would
light.
say,
Well,
I think you'd
again,
say right now is a good time to be dollar cost averaging in at
well, if
better
yeah, we
discounts.
don't recommend buying here because we quit on that. Our buy signals for silver and gold started recently in 2024, March, again in June of 2025 for silver. Let me give you an idea what those prices were. $26 in March of 24, again,
Well,
annual momentum buy. In June of 25 at 34.90, second buy signal. Third buy signal was November last year at $56. We
okay.
offer no more long-term buy signals. If you're not in at those points, it's your responsibility. You're going to have
Okay.
to suffer volatility, maybe, like you've just done.
Yep.
But basically, that puts our average entry price somewhere in the 40s, the last three major buy signals.
Okay. And just to
So
clear for folks,
yeah,
we're
so these
talking
buy
silver
signals
here, right?
here are not major. They're merely
Yeah.
intermediate. Okay.
Okay.
Yeah. I wanted to make that clear. Okay.
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 All right. Sorry, let me just make sure I made the correct statement there. Those numbers you were just giving,
Yeah.
26, 34, 50, whatever.
Yeah, 56, yeah.
Were those GDX numbers or were those silver
Those were
numbers?
no, those were silver bullion.
Silver. That's what I thought.
Yeah,
Okay.
yeah.
Yeah.
That's where our
Yeah.
primary focus is because silver has now shifted to outperform versus gold. And let me pass another thought along.
Sure.
Don't let me be too long-winded here. Silver's taken out both of its prior range highs in the last 50 years. $50, $50, okay? 1980 and 2011. Okay, blew out all its price highs. But the
Yep.
spread relation between silver and gold is right now. Go back up to the silver chart. It may be there. I'm not sure if I got it there or not. No, it doesn't. Okay, okay.
Yeah. Okay.
Anyway, silver right now is 1.6% of the price of an ounce of gold. Think about this. When it was $50 back in 1980, it was 6.5% of the price of gold. When it was at $50 in 2011, silver was 3.1% of the price of gold. So while price has blown out those highs massively, the spread is at 1.6. Imagine if the spread says, hey, I want to do what price did. I want to go up and challenge or take out the old spread relationship highs.
Yep.
I'm going to go up to 6.5%, or I'm going to go above 3.1. Even just going to 3.1 is a doubling of current silver value to gold. Meaning whatever gold does in the next months, silver is likely to do twice as much on the upside percent-wise as gold.
Got
Silver's
it.
the place to be. Okay.
All
Enough.
right. And so with logic, I don't put words in your mouth, but sounds like you're positive on the precious metals in general. So, hey, folks, wait for it to cross those key momentum
Yeah.
thresholds. Then it's game on. Um, and gold's going to do well, but silver's going to, the precious metals are going to do well, but the miners are going to do better than the precious metals.
Mhm.
Silver is going to do better than gold. So
Mhm.
that sort of leads to the logical conclusion that silver miners will do better than the general miner complex.
Yes, if you do a spread relationship or relative performance of GDX, of SIL versus GDX, for example,
Yep.
and we've done this in some recent reports. And go back to 2020 when they both made highs. Price, we had a big rally in silver and gold then in 2020. So gold got up to 2000, silver got up to 30, and the miners had had a big move too. Okay. But then the silver miners depreciated more than did the gold miners, so they underperformed. Then for several years, 24, 25, actually late 23, 24, and 25, silver and gold miners were going sideways in relation to each other. In other words, they were
Hmm.
holding their same value in relation. That spread broke out late last year, meaning silver miners said, I'm going to beat you, gold miners.
Hmm.
The spread said so, and they still are. That spread is still gaining.
Still
Silver miners
maintain.
are
Okay.
beating gold miners. So it's the better place to be among the miners.
So the big question is this: are gold and silver topping out, or are we witnessing the final shakeout before a historic breakout? Michael Oliver believes the structure is already in place, and if silver clears those key momentum levels, the next move could shock the entire market. If you enjoyed this breakdown, make sure to like the video, subscribe, and turn on notifications for more updates on gold, silver, mining stocks, and macro market trends.